Jain Irrigation, which has reported a strong set of numbers in its third quarter. And with a 23% jump in its net profit. To get a final print on the earnings, Yash Upadhyay spoke to the company's Vice Chairman and Managing Director Anil Jain and started off by asking him about the volumes growth across sectors. Listen in.
Volume growth differs between different business business lines which we have, and it's difficult to measure in some, like in micro irrigation business. But micro irrigation business grew 19% domestically. We had a little bit of less growth in export market due to seasonality of a given project. But domestic business grew quite strong at 19% in MIS. Within piping solutions division, polyethylene piping solutions, they grew 29%. And there was a negative growth in another pipe segment. But overall, again, close to about 10-11% into the piping. In case of food, the growth was muted, hardly 2 to 3%, because of value deflation in commodities like mango or onion. But overall, it is a good growth. And if you look at, again, our business is not quarter to quarter, it's more annualized due to seasonalities. Overall, for the first 9 months, entire company across all businesses has grown about 17%. So that is in line with our expectations when you look at the overall scenario.
So the reason I ask you about the volume growth picture is because most of the companies that we have spoken to in the pipes and fittings business especially, they have mentioned about the agri stress and the liquidity crunch which hurt their volumes growth in the third quarter. Have you witnessed any of this? Are you seeing any pressure in terms of volumes, at least in the pipes business?
So that's why I mentioned the piping solution business, where we are more toward industrial application, that grew quite well. But the other piping which goes into rural area, into the farmer, we had a small amount of negative growth in that segment. But combined, it worked out well for us. But rural distress is for everybody to see. It's out there. The farmers are getting very low prices for their various things they make and sell. And another is due to these loan waivers which have been announced. Farmers are unable to get the new credit, especially towards investments like piping or irrigation. And I think that is what everybody is facing in the marketplace when you're looking at rural area. But as a company, we have tried to mitigate our risk by expanding our portfolio and also offering industrial solutions, and which is helping us to tide over overall this negative rural distress scenario for last few quarters.
Okay. Some margins have more or less, remained steady. They've come in at about 10.9%. You've typically done in the lower double digit over the last, at least over the last 4 to 5 quarters that I could see. How much of this has got to do with the raw material pricing, or do you see this as a one-off and see an improvement coming in the upcoming quarters?
I think usually we have higher margins in the last quarter because capacity utilization is better. It is a much bigger quarter. Almost 40% of our annual sales come in the last fourth quarter. So you would see better margins compared to third quarter or second quarter in the fourth quarter for sure.
Sir, also does crude oil prices or the movement in crude oil prices have any bearing when it comes to the margins?
There is no direct relation, but there is indirect correlation because polymers are derivative product on the entire oil value chain and petrocarbon or hydrocarbon chain. But in terms of our buying of inventory and adjusting the impact if it goes up or down, we expect things to be stable. This quarter, maybe next quarter. There was some volatility in last 2 quarters more between June, September and December, where prices went up to September and then they came down. And that we have been able to manage quite well, and it did not really impact our margins.
Okay. So a sizable portion of your earnings also comes from the exports business, and because of the issues at hand in the domestic market, how are you seeing the demand trends when it comes to the export market? Which are the geographies that are doing well?
I think when we look at export markets, I think Africa will continue to do well for us. When I say, over a period of time, because we've got some good project orders in African continent. In case of food business, We have had, our business is somewhat, I would say, stable in Middle East. It's not growing, but we are going to see good growth in Asia Pacific. We are seeing in parts of Europe there is a good growth, or in US market. But other markets are, where currency variation was too much, like maybe Turkey or Brazil, or in that region, exports a little bit slow. So positive in Asia, positive in parts of Europe and US, and rest of the market stable or somewhat muted.
Sir, I remember speaking to you the last time when your company had received a big irrigation order from one of the state governments. A word on where your current order book stands at, and are you in the process of bidding for any such big orders?
Our current order book is about 5,000 crore for the, as we started this quarter, which is quite high considering earlier, the levels of orders which we used to have. So we are at a comfortable position in terms of going forward and executing those orders. I cannot comment specifically of a given tender in terms of where and how we will bid, or what is going to happen. And also we have, upcoming election. Even last quarter there was some disruption in the business because 3-4 states were out for election. So I think one has to wait and see how things pan out over next few months. But already the order book we have in hand should give us good growth spurt and momentum for the FY20, and closing good fourth quarter in FY19.
Okay. And lastly, sir, coming to your food processing business, the revenue growth has been good as well, but a big surprise has come on the margins front. It has margins of close to 13%, if I'm not wrong, in the third quarter versus a lower single-digit number that we saw in the same quarter last year. What are the kind of opportunities that you're seeing there? How do you plan on looking to scale up this business going forward?
This year this business has been impacted, as I said, due to deflation, especially in mango, onion, etc. And we expect next year to be a much better year for the food business, and not only based on hopefully some higher product prices, but also that our new business of spices will reach some meaningful scale in the coming year, and the contribution from that business would also help us to improve margins. And this year also we are in the process of launching our retail products, like spices or frozen fruits, etc., which we are taking straight to the consumer. And these are the early years of trying to build a brand. So combination, it's a lot of exciting things happening in the overall food business, and whether it's about we are getting into citrus processing, or the fact that we have got into spice processing, and our existing business of mango, onion. Also, we continue to get some new customers around the world. Overall, food business is going to play a very important role going forward. As a country, we process single digit as against countries like Brazil, which process 60 or 70% of their fruits, vegetables. And as India, where both parents are now working, there is more demand for this kind of good quality product. And the fact that we offer traceability, we work with small farmers, we do contract farming. Eventually in future we can offer also more organic product. These are going to be big pluses for our company, as we build the brand and also distribution.